If you're under 40, the biggest financial mistake you can make isn't skipping life insurance. It's buying the wrong one. Because right now, while you're young, healthy, building your career or your family, insurance companies are quietly trying to lock you into policies that sound smart, but cost you tens of thousands over your lifetime. And most people your age fall for it. Pause. Before you sign anything, before an agent convinces you of a must-buy plan, before you think you're getting a great deal, watch this. It will save you money, stress, and potentially decades of regret. Welcome back to InsurBite, where we turn the insurance industry upside down. No fear tactics, no complicated jargon, and absolutely no pressure to buy anything. Just simple, honest information. The insurance companies hate that, you know. Today's video is especially important because it asks for a group nobody talks to when it comes to life insurance. People under 40, young adults, new parents, new homeowners, professionals building their careers, people paying off student loans, people planning for families, people who think, life insurance, I'll worry about that later. If that's you, I want you to hear this. You are in the most powerful financial stage of your life when it comes to life insurance. You can lock in better coverage for lower prices, with more flexibility, and less fine print than someone even 5 years older than you. But, and here's the scary part, this is also the age group agents love to pressure, guilt, or confuse into buying policies that don't fit their real needs. Why? Because you're young enough to pay premiums for decades. That means bigger commissions, longer payment timelines, and more opportunity to upsell you things you don't actually need. When you're under 40, you are the ideal customer and the perfect target. And that's exactly why I'm making this video, because nobody tells you the policy they're selling you might be overpriced. You could get the same protection for 90% less. You're being pushed toward products that benefit the agent, not you. You don't need the same plan your parents had, and you can actually build wealth better by choosing the right type of life insurance, not the most expensive one. This video will break down why under 40 buyers get misled, the biggest mistake young adults make, the secret reason premiums explode after age 40, term versus whole life, the truth, hidden fees and commissions agents never mention, how to get the lowest rate possible, the smartest strategy for anyone under 40. By the end of this video, you'll understand more than most insurance agents, and you'll be able to protect your family, your finances, and your future without wasting money, without falling for sales tricks, and without choosing the wrong policy. So sit back, because what you're about to learn could save you thousands, or even tens of thousands, over your lifetime. Let's get started. Most people under 40 make the exact same mistake, and they don't even realize they're making it. They buy life insurance backwards. Instead of starting with, what do I need? What are my goals? What coverage actually protects my family? They start with whatever an employer gives them, an agent pushes on them, a friend recommends, or a random quote they Googled. Under 40 is a strange phase when it comes to life insurance. You feel young, you feel healthy, you feel like nothing bad is going to happen anytime soon. So you're vulnerable, not because you're irresponsible, but because insurance isn't urgent yet. And that's exactly why insurance companies love customers under 40, because most of them never compare prices. They don't understand policy types. They trust an agent too quickly, or they assume expensive must mean better. But here's the truth, when you're under 40, you don't need most of the things agents try to sell you. This is the decade where you get the lowest rates, you qualify for the best health classes, you have the most options, you have the most negotiating power, and your needs are actually very predictable. But if you choose the wrong type of policy early in life, you'll overpay for the next 20 to 30 years. And this happens to millions of people. Someone in their 20s or 30s gets talked into a cash value policy they don't need, or they buy too little coverage because they didn't know how much their family would eventually rely on them, or they rely on employer insurance, not realizing it disappears when they leave the job. By the time they figure it out, it's too late. Premiums have doubled, or their health changed, or they missed their chance at low-cost coverage. The goal of this video is to help you avoid that mistake. Because if you're under 40, the decisions you make today determine whether you pay cheap, predictable premiums for decades or inflated, unnecessary premiums draining your future budget. This is the part nobody teaches under 40 adults. But once you understand it, you gain control. And no agent can ever mislead you again. Insurance agents don't tell you this part, but you need to hear it. Your 30s are your last cheap decade. Here's the secret. Ages 18 to 39 gives lowest risk. Ages 40 to 49 gives risk grows faster. Ages 50 plus gives premiums explode. This is why people under 40 have a massive advantage. You're safer, you're healthier. Statistically, you're far less likely to file a claim. And insurance companies price everything on risk. So if you buy young, you lock in the lowest rates. You keep those low rates for 20 to 30 years. You save thousands over your lifetime. You avoid strict health exams later, but here's the dark side. If you wait until after 40, your premiums can jump 20 to 50% overnight, even if your health hasn't changed. And by age 50, your premiums can be 3x to 8x higher for the same coverage. Why? Because life gets real after 40. High blood pressure, anxiety meds, cholesterol, prediabetes, sleep apnea, weight changes, minor surgeries, family history concerns, random health events you never expect. You can be perfectly healthy today and still become uninsurable by your mid-40s. People under 40 rarely think about this because they haven't lived it yet. Here's a real example. A healthy 32-year-old bought a $500,000 term policy for $27 a month. His friend waited until age 46. Same health, same income, same lifestyle. His premium, $121 a month. For the exact same policy. That's the cost of waiting. And the worst part, people assume I'll get it later. I'm fine right now. But later isn't guaranteed. An unexpected diagnosis can instantly double your premiums or disqualify you entirely. This is why under 40 adults must hear this. You buy life insurance before you need it, not after, because when you need it, it's too late. This is the part agents hope you skip, because it's where they make the most money. Let's break down the two main types of life insurance in simple, honest language. 1. Term life insurance. What 95% of under 40 people should buy term life is simple, affordable, predictable, easy to understand. It covers you for a set period, usually 20 or 30 years. During the years when you're building your career, raising kids, paying off debt, buying a home, planning for the future. Term life protects your income. It's not supposed to last forever. It's supposed to cover your most important years. A $500,000 term policy might cost a young adult $20, $40 a month. That's why most financial experts recommend it. 2. Whole life insurance. Expensive, complicated, not built for most people under 40. Whole life is permanent, builds cash value, guarantees a payout someday. Very expensive, 1020x more. Most agents push whole life to younger adults because the commissions are huge. The premiums are long-term. You don't know enough to say no. You won't feel the pain until later. Whole life has specific uses: high-income earners, special needs, financial planning, estate planning, business protection, wealthy families, building tax shelters, but most people under 40 simply do not need it. And here's the truth agents avoid. You can build wealth faster and easier without whole life. The cash value grows slowly, the fees are high, and the flexibility is low. Most people who buy whole life in their 20s and 30s regret it later. The honest conclusion: term life equals protection. Whole life equals complex financial tool. If you're under 40 and just want protection for your future family, Gives by term. Gives, keep it simple. Gives, save your money. You get more coverage for less money. And that money can go toward retirement, investments, emergency savings, paying off debt, building your life. Life insurance should protect your family, not drain your bank account. Most people under 40 choose a random number. $100,000, $200,000, $300,000. They think it sounds right, but those numbers are usually way too low. The proper amount of coverage depends on one thing: how much money would your family need to survive without your income? Here's the simple formula used by financial planners. The DIME formula: D, debt, school loans, car loans, credit cards, etc. I, income replacement. Your family usually needs 10 to 15 years of your income. M, mortgage. You want your family to keep the home. E, education, kids' future, college or schooling costs. Example, let's say you're 32 and make $60,000 year. Debt, $20,000, 10 years income, $600,000. Mortgage, $250,000. Education, $80,000 total equals $950,000. That means $750,000, $1 million in coverage is actually reasonable. And when you hear that number, you might think, isn't that expensive? No, for someone under 40, term life makes this cheap. A healthy adult in their 20s or 30s can often get $1 million of coverage for $25, $45 per month. That's less than eating out once a tank of gas. Hack number 1. Buy before your birthday. Rates increase every year, literally. Even if you're still 29, insurers may rate you as 30 depending on how close your next birthday is. Buy as early as you can. Hack number 2. Choose a longer term. A 10-year policy seems cheap until it expires at age 40 and the new rates are double. Smart buyers lock in 20 to 30 years while they're young. Hack number 3. Compare at least 5 companies. The difference can be $20, $60 a month for the same coverage. Never buy from the first quote. Hack number 4. Fix small health issues before applying. Even minor changes matter. Los 5 menos 10 lbs. Lower blood pressure, drink less caffeine, reduce smoking or vaping. Improve cholesterol, avoid nicotine for 1 year. A few tiny adjustments can save thousands. Hack number 5. Avoid unnecessary riders, accidental death riders, return of premium, waiver of premium. Some are great, but some are just upsells. Only choose riders you need. Hack number 6. Use independent brokers. They compare multiple companies for you. Captive agents can only sell one company even if another offers cheaper coverage. Hack number 7. Don't wait until health changes. A single diagnosis. Sleep apnea, anxiety medication, blood pressure, depression, cholesterol, thyroid issues, minor surgeries can skyrocket your premiums overnight. Buy before your health changes, not after. Hack number 8. Use employer insurance only as a supplement. Employer coverage disappears when you switch jobs. Never rely on it as your main plan. These hacks alone can save you thousands over your lifetime. If you're under 40, life insurance is cheap, but only if you play the game correctly. Now that you know everything, here is the perfect blueprint for under 40 adults. Simple, clear, powerful, future-proofs. Step 1. Decide what you want your policy to do. Do you want income replacement, family protection, mortgage coverage, future stability for kids? This determines your coverage. Step 2. Choose term, not whole life, unless you're wealthy, a business owner, or need advanced planning. Term is the best choice. Step 3. Get enough coverage. Use the DIME formula. Most under 40 adults need $500,000 $1,500,000. Don't underinsure yourself. Step 4. Choose 20 or 30 years. This locks in your low rates for the longest time. Protect your future kids and future home. Step 5. Compare multiple companies. Never buy from one quote. Compare at least 5. Step 6. Add riders only, if necessary. Child rider. Living benefits. Disability waiver. Choose wisely. Step 7. Buy now, not later. Every year you wait equals higher premiums forever. Buy before your next birthday. Your health changes, your income rises, your life gets more complicated. If you're under 40, you are in the most powerful and most vulnerable stage of your financial life. Insurance companies know it. Agents know it. Most people your age don't. You now understand how to avoid overpriced policies, how to avoid manipulative sales tactics, how to get the lowest rates, how to choose the right type of insurance, and how to protect your future without wasting money. Life insurance isn't about death. It's about your family's future, your income, your stability, your dreams, and the people who depend on you. And once you choose the right policy, you gain something priceless: peace of mind. You protect your future before life surprises you. If this video opened your eyes or saved you money, subscribe to InsureBite, where real insurance advice finally exists. Like this video so more people under 40 can avoid getting ripped off. Comment below with any questions. I respond to as many as I can. Thanks for watching, and I'll see you in the next video.